Recording. We're still a little minute away from everybody being here, but thank you so much for being here. So you can see my screen, you can hear me, and it's Friday afternoon. I want to know if anyone's actually having a glass of wine yet, or if you're actually having a cup of tea. So if you could just type in whether you're drinking tea and what type, and whether anyone's actually drinking wine. I've got sparkly water, which is my favourite drink when I'm doing a webinar. But, oh, we've got a coffee. Great, yes, and that's nice. So good to have you on board. It's beautiful here in Sydney. It's sunny. We had a horrible day yesterday. That's too cruel. I'm waiting for coffee, but now I'm thinking about wine. Coffee here too at the moment, wine later. So, yeah, terrific. Okay, so I'm just looking at the time. We have one more little minute before people come along. You know what? This is actually going to be a really packed hour. It's pretty solid. I've put in so much information for it. I have pages of notes which I shall be reading through and adding lib to, and I'll be having sips of water to keep my throat going. So one more little minute, because I know there's quite a lot of people registered. Actually, you know what? We got pretty close to almost filling this workshop. So we know that the, actually I could probably turn off the recording, couldn't I? We know that what actually happens is people register and then for some reason or another they actually can't get here. I did have 2 people email me and say they couldn't get here, but they also didn't have any questions to ask. I know a couple of you have emailed me questions, and what I have done is actually build that into the actual recording, into the actual content. So if you still have any questions, you'll be able to type them in. But you know what, I'm just going to jump right in and get started. So thank you so much for being here. The others can catch up because some of my beginning is actually just the introduction anyway. So can I just get everyone, well, if you feel comfortable doing it, just to type in one word that describes how you're feeling about the weekend ahead. Me, I'm thinking about surfing, and given the weather we've had, I may or may not be surfing, but I am feeling really excited about getting surfing at the weekend, whether it's sunny or not. We've got lots of people from all around Australia. I've got someone registered from the UK. They're going to be listening to it in the resources library. And if you don't know how to access the resources library, just send me an email, training@healthynumbers.com.au. Can I just make 100% sure you can still hear me? Because nobody told me how they're feeling about the weekend. Can someone just type in yes to let me know that you can actually still hear me? Great. All right, we're there. Yes, we can still hear me, and you're feeling great about the weekend. Terrific. Okay, so wherever you are, look, I just want to acknowledge and thank you for taking the time to work on your business, you know, especially on a Friday afternoon. It can be really seductive to get caught up in the doing and being in our business, and sometimes that happens to me as well. You know, I think, gosh, what have I actually been doing? But this masterclass is purely about on your business. So one of the ways that you can make the most of this masterclass is to actually take notes, turn off any other distractions. You can put your hands up if you have any, if you need to know, if you want something, type. Oh, we've got someone excited and yoga at the weekend, so that's good. If you need any assistance, then just type in your question. I can see them as we go. You're all muted. If we actually want to have a chat about something, I can unmute you and we can have a chat, but everybody will hear that as well. If you're needing to listen to this again, it's available in the resources library. Now, so you and your business. So I know you are an expert in your field and you've started your business because you have great ideas that you want to bring into action in your own time. You don't want to have to wait around for somebody else to give you permission to do things. So that's part of the reason that you have started your own business. And I know because you've told me is that you want to make a difference in your community, for yourself, for your family, and also improve your industry. And this is one of the things that's very important to people who start their own business, is that they want to make a mark on the actual professionalism that they're in. So whether that's Pilates, being a virtual assistant, being a dentist, being the best at acupuncture, creating fabulous coffee in your cafe or terrific meals in your restaurants, I know that part of the reason you want to start your own business is because you actually want to bring a level of professionalism to your industry. So I'm going to be really brief about introducing me because I know lots of you already know me. I'm a business coach and I work pretty much across the spectrum of businesses, but I specialise mostly with people who are thinking about starting a business or who are in that very early stage. Most people, there's people doing a side thing, or as they say in the US, the side hustle, sort of running their business while they still have a job or work with somebody else. And I know that some of the people listening are in that situation. And I know some of you have stepped into the space of actually having started your business, and it's pretty tremendous that that's happened. That's always great. So I'm just also, I've worked with about 1,000 businesses. I find a lot of my businesses come from the health and wellness industry. I've developed an online program, So You Want to Start a Pilates Business, and I have run that face-to-face, and it's an online program, and I'm a teeny bit excited because the US PMA, Pilates Method Alliance, have actually just endorsed that for professional development points. So I'm feeling a bit chuffed at the recognition of that. So some of you know I'm in the middle of writing a book. It's with my editor, and hopefully that will be available. Hi Claire, glad to see you're here. The book will be available before the end of the year, hopefully. So if you'd like me to send you a copy, just type in, yes, can I have a copy of your book? And I'll make sure when that book is available that you get your own personalised copy. So look, I'm a small business person myself, and I know how hard it can be to actually, get your business up and running. All right, look, enough about me and the business. One of the keys to business success is a relentless focus on the client and the customers. And I know that, I know you're here because that is, thanks Rachel, I know you're here because the client and the customer is very important to you. So let's just jump into cash flow and all about cash flow. What we're going to do in this webinar is we are going to answer some key questions, the ones that were in the promotional material, and I'll go through those as we go. We're going to look at a cash flow predictor, and I'll show you how that works. And it says 5 ways to improve cash flow. You know what? I started with 5, I got to 8, and I've actually got more. So you're going to get way more than 5 ways to improve your cash flow. Okay, so just about where is cash and how does it fit into our business? You've heard the expression cash is king, and that's because cash is the lifeblood of every business. It requires careful monitoring and management, and requires a basic understanding of the numbers in your business. My business is called Healthy Numbers because that's what we want. We want healthy numbers in your business. So in very simple terms, what your business needs to have is positive cash flow. And I know this is going to sound pretty basic, but there needs to be more money coming in than what is going out. So where does cash come from? Ultimately, cash comes from your customers. Money comes in from clients, from customers. They buy your products, they pay you for your service. So if we take that very first question, how could a business run out of cash? Business runs out of cash because more is going out than what is actually coming in. And one of the most common reasons for this happening is 1, not charging enough for what you are providing, and 2, not actually making enough sales. So both of these situations can happen because the business actually doesn't know how much they need to charge, and or they don't know how much they need to sell. Annette, have you put your hand up just now, or has that been up there for ages? I can see your little hand is up. Annette, did you want something? Okay, can't see Annette typing something. Oh, you put your hand down. That's good, thanks. So the situation of not making enough sales and not charging enough comes because we actually don't know how much we need to sell. And what do I mean is, look, so I was in a cafe recently, and I do spend a bit of time in cafes, and there were some people planning a new menu for a new restaurant, and they said, we need 600 people coming in every day. So somewhere along the line, that actually calculated or made up out of thin air, this idea that 600 people needed to come in every day. So if you're a cafe and you're open for 12 hours, now that's a long time to be open, that's 200 people need to come in every hour. Sorry, 12 divided by 600. You've got to do the minutes, and I've just done that calculation wrong, haven't I? 600 people coming in every day over 12 hours. So 12 times 60 is 720, divided by 600, sorry, is 120 people coming in every hour. So every hour of the day, where are those people going to come from? 50 people per hour. Thank you, Anna Louise. So you have to have 50 people coming in every hour. So I've got my figures around the wrong way. So 50 people coming in every hour, where are those 50 people going to come from each and every single day? So what I see happen is that many business startups don't know what they actually need, how to pay for something. So if we think about the cafe example, so say your rent is $1,000 and you sell a coffee for $3.50, and the cost to produce that coffee is $2. And the profit on each cup is $1.50. So how many coffees do you need to sell in order to pay the rent? So you divide your 1,000 by the profit on each cup, and that's 667 coffees a week, or 95 coffees per day if you're open for 7 days. So it might not sound like very many coffees, but what are all the other expenses? There's stocks, there's materials, there's rents, and I've listed some of them out here. Other office expenses, the phone, the internet, promotional costs, wages, and it just goes on and on. So this is one of the key exercises, and I know some of you who have worked with me have actually done this, is what is the actual, how much does it actually cost you to run the business? Because the next thing we actually want is the break-even point. The break-even point is the exact point where all the expenses and all the costs are covered. So that's right here. So if we have a look at this graph, so you can see this red line here, this is your fixed costs. And your fixed costs are the costs that no matter what else you are doing, these are the costs that you have to pay for. So even if you just made one coffee, you still would have to pay $1,000 rent. So even if you're not open all week, you're still paying the $1,000. This blue line is what's called the variable costs plus the total, plus fixed cost, which is the total costs. So your total costs are the variable costs. So a variable cost would be how much does it actually make, how much does it actually cost you to make one coffee? How much does it cost you to, you know, make one dress if you're making dresses? If you're a florist, how much does it cost you to make the one bunch of flowers? So the green line is revenue. Now what's interesting about the green line is that even if you have no income, you still have all this fixed cost here. So the green line, and it intersects with the blue line, which is your total cost, and that gives you your break-even point. So I can hear some of you, because I know some of you actually don't sell products, that you actually sell a service, and you might be thinking, well, mine's different. And it is different, but it's basically still pretty much the same. You may just have more fixed cost. If you're a yoga studio or a Pilates studio, or if you're a personal trainer, you will still have the outgoings. So you might have rent. How many clients do you need to see every week just to pay the rent? And then there's all the other costs. So each business listening can calculate what is your break-even point. So once you know your break-even point, that can then help you understand the viability and ultimately your profitability. So now that we understand how the costs work, a client came to me probably about 6 or 7 months ago, and she was really struggling with costs and monies. And when we actually did the calculation, we did this calculation, every single time she sold a product, she was losing more money, because it was actually costing her more to produce what she was doing than it was that she was actually charging. And how does something like that happen? Something like that happens because she had, her cost of materials had become more expensive, her couriering, she delivered something, and she had gradually fallen further and further behind. So while you might have done this some time ago, it's actually a really great exercise to do on a regular basis, just to go back and recalculate your break-even point. Because if you're paying just a little bit more for this and just a little bit more for that, and you've added on, you know, maybe you're now paying another $30 or $40 a month for something else, Adding those all on means that it's increasing your total cost and your fixed costs, your total cost, your variable costs, and your break-even point, instead of sitting up here, may actually start to slide back down over here. So really, really important to keep tabs on your break-even point. Now, many of you will be using Excel or accounting software, or maybe you have a bookkeeper, and all the traditional financial reports give past performance. So when you're looking at the reports that come out of the software, when you're looking at your Excel and you're looking at your bank statements, all of this is past. So what we're actually wanting to do is look towards future profit and future projected cash flow. So I'll show you how to use the cash flow predictor. I'll show you how to use that shortly. So firstly, I just want to talk about why profit is different to cash flow. And profit is different. Your profit and loss report can actually look quite healthy. It can show that you're making a profit, and yet there can be little or no money in the bank. And so therefore, not actually having enough available funds for payments. So this can be something that's quite difficult for a business to grasp. So I'm making a profit, but why do I not have any money? And the most common reason for this is that it's about the timing of the money's in and the money's out. For example, you might pay out for the necessary expenses, and you might not have been paid for the related goods and services. I'm just going to have a sip of water. So let's look at the cafe example again. So if you're paying $1,000 a week rent and the rent goes out monthly, well, that would be $4,000. And even if you're not paying that much, even if you're only paying $100, it's still the money goes out in advance. And chances are, if you're paying rent, you've probably got a 3-month bond or even a 6-month bond, which could add up to thousands of dollars. And all of that money has had to go out in advance. And the cash for the coffees is coming in day by day, you know, a couple of dollars at a time for every coffee. So this large amounts of money having to go out puts extreme pressure on cash flow. So if you think about how that might work in your business. So we think about the coffee company, the milk vendor. These people probably want their money when the products are being delivered to the cafe. So that puts additional pressure on the cash flow. And this is one of the reasons that businesses like cafes, wine bars, restaurants are always under great financial pressure. Imagine having to buy all the alcohol and the glasses to set up a wine bar, even a really small wine bar. They're often paying back bank loans for the fit out, and it can be thousands of dollars. We've got a brand new, very fancy new cake shop that's just opened at the top of my street. And they've only been open a couple of weeks, and they already were opening weeks later than they thought they would. So they had rent going out, they had expenses being paid, and no money coming in. So, you know, how do you get that timing right? And how, you know, so it really is, you know, getting that cash flow. How do you fund that early part? I've just started reading Steve Jobs' biography, and up to the part where they're trying to produce the Apple II. And this is in the late 60s or early 70s. And they need $250,000, you know, for what they need to put together a number of these so that they can take them and sell them. Where would they get $250,000 from? You know, these two guys did not have that sort of money. So business can almost be out of business before it gets started. So it's the timing of the cash in and the cash out that puts pressure on cash flow. So that's what I'm going to talk about today. I'm going to talk about ways that we can actually improve the timing and get things in before you have to put things out. That's really simply how you manage cash flow. It's difficult to function when you're worried about cash. When you're worried about paying your suppliers, it's really hard to do your best work when you're anxious about the money in the business. So one of the ways that you can stay on top of things is to use a predictor or a calculator. So I've put together a really simple spreadsheet. It's in your materials there. You should be able to see it and just download it there. And if you can't, and maybe don't take time to do it, that's, yes, somebody's saying that's right where I am. I'm not able to do my best work because I'm worried about money. Yes, and I know who you are, and I know that we talked about that this week. It's really stressful. It's truly stressful when you're really worried about money and not able to do your best work. Anyway, back to this cash flow predictor. So you've got access to this, and I suggest you have a look at it afterwards, but this is how it works. So you can see down the bottom here, it says example cash flow predictor. So this is an example that I've put together for you. And over here on this tab, is the one that you can put together for yourself. So when you go into the Excel spreadsheet, it will open on this page, and then you'll go over to yours and you'll be able to put these sorts of things in yourself. And certain cells are protected, so you cannot mess around with it, but there's other cells that are open. So you'll put together the cash at the beginning, and then you put where are the revenue ins and the revenues out. And you know, this is really a very simple cash flow projector. When I worked in a couple of large corporations, part of my job as an accountant was actually to do the cash flow. And depending on the size of the business, it dictates the complexity of these kinds of calculators. And look, sometimes your software, your accounting software can do these as well. But for most of you, most of you listening, this sort of a spreadsheet will be ample for your needs. And you can always just create a new tab and copy it over and start again each time that you want to do a new calculation, or you can delete them and start again. So this is for you. You can download it here, or if you're listening in the resources library, it will just be there forever, and you can keep downloading it. So there's clear instructions up there. I'm not going to spend a lot of time looking at it because I have other things that I really need to talk about, but you can see in this example, so it's the 15th of March when I put this together, and you've got the ins and outs during March and April, and we know that we have a BAS payment due, and that is actually going to put the cash into negative. And something like that, the rent or the BAS due, these are the sorts of things that can actually put us into negative. And this is how it will show up on your calculator as well. Okay, so what do you do? So you've done this calculation, and you can see that in 2 months' time, chances are you're going to run out of money. So that's why this sort of thing is so important. You know, in some of the roles that I've had as an accountant, we used to do this every day so that we would know where to move money around, how to put money into accounts so that we could pay wages, how we could pay suppliers, when do we pay suppliers so that we can actually you know, have enough money to do things. So let's take a good look at some of the things that you can do and ways to prevent the business from running out of cash. So some of the things I'm going to talk about are about creating more money coming in, and some of them are going to be about preventing too much money going out or going out at the wrong time. So the very first one is deposits. Now, asking for deposits from clients or customers, for example, an architect might ask for 25% or 50% deposit before they start. The website builder probably, you know, if you've put together a website, you probably had to pay a certain amount of that before you were able to get started. Restaurants sometimes take a holding deposit for large group bookings. The dentist might take a deposit when they're, you know, when you're getting a crown or an implant done. A florist would take deposit for flowers for a wedding. A photographer, if they're doing photos for a wedding, they may very well do something similar. So, how could you start to take deposits in your business? Now, some of the things I'm going to talk about will be more applicable for some of you than others. So just take on board the ones that are going to work for you, and the ones that you think won't, maybe have a little think about how they might work. Another little sip of water before you sort of dismiss them out of hand. Okay, so the next one is materials and supplies. And look, there's a few points here, and I know this doesn't apply to everybody listening, but for some of you it will. So aligning the ordering and payments with your income. So, you know, like I was saying earlier about the milk and the coffee in a cafe, if you're getting the milk delivered every day, okay, so somebody's saying that when they were working as a photographer, they always took a full payment up front. I am actually going to talk about full payments as separately to deposits, because that's a completely, you know, that's another way to do it as well. So aligning, when you buy in bulk, you might receive a purchase discount, but what if that's putting pressure on your cash flow? It's important to ask, is it worth it? Also, buying in bulk can create storage issues, where to put things. Over-ordering can lead to potential waste, damage, or expired stock, which actually can put more pressure on your cash flow and the profitability of your business. I know an exercise business that last year when they opened, they actually spent a lot of money on on actually buying goods to have in the studio, and after a few months, absolutely none of them had even really been bought, so they actually had to sell them at quite a big discount. So that can actually be quite a waste of money. Holding stock drains cash flow, and poor management of stock, that can actually erode cash and it can erode profit. Okay, so the same kind of goes for buying equipment in a business. There will be some things that you need to buy as you get started. There will be some things that if you needed a new computer, if you're in Pilates, a new reformer could be anything from $1,000 to $3,000 or $4,000. A cafe, I know there's somebody in the restaurant industry listening in on this. I know that the cost of a new oven or to have to buy new glassware can go into hundreds and thousands. And as I said, Steve Jobs needed thousands of dollars just to get his computer boards and his casings. So how can you minimize the impact of on cash flow of having to buy new equipment? Well, you can buy out of profit. You can actually buy from the profit in your business, or you can save up for your equipment and in your business, and that's kind of like buying it out of the profit. So some of you who know and have listened to some of my podcasts, you will have met Helen, and Helen is extremely successful business selling delicious food items at the markets and in stores, and she is actually just about to open her own store in Newcastle. So in my podcast interview with Helen, she tells a story about her team wanting to buy a new piece of equipment. They calculated how many marshmallows they had to sell in order to be able to buy the equipment. And as a business, they buy nothing on credit. They save up for everything. Another way that you can fund equipment is to lease or rent, and then versus the actual purchase, or you can have a lease and buy arrangement where you pay lease costs for a period of time with the option to buy at a point in the future. You could take out a short-term loan. Many of the banks are falling over themselves to support small business. Some of the smaller boutique banks have actually got some pretty good interest rates and are prepared to lend quite small amounts of money to businesses. So I'm going to talk about prepayments now. So number 4 is prepayments. And this is actually different to taking deposits, because this is actually taking the whole fee. As one of our listeners here said, that when she was a photographer, she took the whole fee up front. I have a dentist that I work with, and he offers a discount if his patient pay up front when they're having braces done, because braces often can be something that people pay for over quite a long time. And what he does is he offers a discount if they pay for the whole thing. So, when you actually calculate, you actually then have the use of the money for the period of time. It's a bit like when Adele tickets go on sale and we all pay for those tickets, or Bruce Springsteen, and they have our money for a long time before we actually even get what we paid for. The money comes into the business before you have to spend it. So if you think about books, training courses, any of the online products are often offered as a prepaid. So you have to buy something before you actually get it. Think of your data plans, your phone. Private school asks for fees up front. So think about, how could this actually work in your business? How could you get a complete prepayment? Gyms, when we pay to go to the gym. So I'm being asked, is there still a $20,000 government incentive? If yes, can you explain? I haven't explained that already. So a $20,000 government incentive, what that means is that if you are, what the question is if you buy something that costs less than $20,000, it means you can write it off in your business straight away. So yes, that still exists at this point in time on the 31st of March 2017. No guarantee it'll be the same, if you're listening to this sometime in the future. That amount has moved around, and what it means is that you can tax it straight away. So that $20,000 can be a deduction in this particular year, financial year, if you've got the money to pay for it, or if you have a loan, if you take out a loan and then you have, depending on how the loan is taken out, those payments may or may not be treated in the year. But if you pay cash for something and you've paid for it in the year, it's a $20,000 deduction as an expense rather than something that you have to expense over 3 or 5 years. So when you buy an asset, it's usually depreciated over a period of time. So if it was $20,000 and you were depreciating it over 4 years, then you would have a $5,000 cost this year, a $5,000 cost next year, and a $5,000 cost in the next 2 years. What this $20,000 question is then you have the whole $20,000 comes out in this year. So I hope that makes sense. And happy to talk with you a bit more about that, or you can ask your accountant. So one of the other ways that you can actually increase the money coming in is that you can actually make more sales. And I know that's just going to sound really basic, but it's amazing how often businesses actually don't think about this when it comes to cash flow. A client of mine late last year, they wanted to pay $20,000 for some travel and some overseas training, and we were looking at how on earth they were going to find $20,000 to do that, and they just sold more. They just made more calls, they sent out more emails, they just followed up on more people, they looked for some of the loose ends that hadn't been tied up. They actually found the $20,000 in their existing client base, plus some new clients as well. So it's really important to understand the break-even point and what volume of sales is required to cover that, and then how could you make more. So having a really strong strategy, a sales strategy that involves growing the business. Now, the caveat on that, of course, if you're running a sole business, is can you actually make more sales? Can you actually do more work if you're doing everything yourself, or has the physical space that you've got the ability to take more clients? The other thing that can really mess around with your cash flow is GST and tax payments. So one of the things I see in a business all the time, it really messes it up, is that neglecting to put that money aside. If you collect GST, it's not your money, it sits in the average day account, and you get a false sense of the cash. And as we looked at on the example back on the cash flow predictor, it's really easy to see where that can actually in the future bring you unstuck. So one of the things that I really kind of insist on or strongly suggest when I'm working with clients is that they establish some sort of separate bank account, and they put that money across into that on a regular basis. So I'm going to talk now about invoices, because I think this next section is where a lot of difficulty comes for a number of people that are in business. So if you're not collecting prepayments or deposits, I really strongly suggest that you issue your invoices when you do the work. No delay, not the next week or days later, but actually have the invoice issued at the time of work. And it's really hard to believe that sometimes people completely forget to actually issue an invoice or ask for the payment. And this is one of the most surprising reasons I hear for a business not having cash coming in. The business environment we're living and operating in today with the various types of software, there's really no excuse for not issuing an invoice immediately. I remember being at a networking breakfast a little while ago, and one of the people was saying about a glowing recommendation for a local plumber, about how they'd done a great job and it had been last week and they still hadn't received an invoice. Maybe he's forgotten. If our plumber is really busy and doing all his own bookkeeping, maybe he had a busy weekend and he didn't get round to his accounting at the weekend. So how could that happen in your business? Is there an invoice that you maybe haven't even sent out? So making 100% sure that your invoice is correct. And with the software today, this is almost done for you. If you're using Xero or MYOB, or if you're using QuickBooks, these software systems, these accounting softwares, do this work for you. So you can have something, if you're doing it yourself, you can figure out how to do it, or if you're a bookkeeper, you can work out how to have something that's mobile, that you can actually issue the invoice as you're doing the work. So the invoice itself, making 100% sure that it's correct. Is the name of the other company correct? Have you got their address? Is the correct amount being charged? Have you put the correct amount of GST? Does it have your ABN? Does it have your account details? I was astounded recently. I got a bill from a medical specialist that I'd been to, and it said, please pay this amount. And there was absolutely nothing on the invoice to help me pay. I don't have a check account. I'm certainly not going to the post office to get a bank order. Another little sip of water. And so no bank account details. Or make sure your bank account details are correct so that if somebody's actually going to pay you, that they can. So setting up clear agreements with clients and customers. What are the terms and conditions? And, you know, if you've got some questions about this, talk to your trusted lawyer. Sorry, I do have to have a little cough, so the recording. Okay, so we're back on track. So when you're setting up your agreements with your clients or customers, you may need to have a discussion with somebody legally to make sure that you actually are able to have the conditions set out in a legal document. Having the conversation with your clients, what services are provided, what are the payment terms, what do you expect from them, what can they expect for you, when is your payment due, and what are the payment options that they have. So being really transparent from the beginning. And, you know, some of the accounting software can really help you with this. If you're actually selling a product, some of the accounting software can actually put pictures of the items sold into the invoices so that when the person receives the invoice, they can immediately recognize what the invoice is for. I remember some time ago, you know, when I was working in the accounts area, you'd receive an invoice and it would say 20 items of code number VST457, an invoice for, you know, $700 or $800, and no one could actually remember what they had actually, what that item was. So nowadays, you know, with being able to put pictures into invoices, it makes it really easy for people to know what they've actually paid for. And that's another really good reason for actually putting, for having the person have the invoice as close to the actual service or the product as possible. Because if there's a delay, the person has already had your service. They've already started using your product. Just having another sip of water. And so the closer you are to having your invoice in their hands, they are more likely to pay for it. And the same goes with that then if you're actually having, if you're doing prepayments and taking deposits. So checking with your bookkeeper to see what your software can do. Now I know that there's a couple of people listening who have asked me, what do you do when there's outstanding debts or if a company hasn't actually paid you? So if this is your area of interest, this might be where you want to listen. So it's amazing how often a business actually has monies owed to them and they don't collect, or they find it difficult to get the money. Over a quarter of SMEs, 26%, identified that they struggle with cash flow. And they said late payments from customers are putting them under undue pressure. And the Reserve Bank of Australia has actually put together some statistics, and they've said that on average, an invoice will take up to 45 days to be paid. Now, for a small business, 45 days is a really long time to have to wait for their monies. And there's a lot of lobbying going on at the moment to help, to try to bring in some kind of legislation where big companies have to pay small businesses. And in a recent survey of Xero did of 500 businesses, 4 out of 5 said that they would back having some kind of government policy, because the vast majority of small businesses have payment terms of 30 days or even less for their suppliers. Many big businesses mandate terms of 60 or more, and some refusing to pay faster than 120 days after invoice. And, you know, I remember some years ago meeting a woman who actually provided products to Qantas, and she said despite having the great kudos of working for Qantas, it just wasn't worth it because it took them so long to pay. And I'm working on a blog about this because, you know, small businesses aren't banks. You know, that the big business is using their payments as a way of managing their cash flow. So what can you do? And so I'm going to give you some, if you're actually dealing with a large company, one of the things that you can do is to negotiate a shorter payment cycle. Now, many big businesses actually do have the capacity to pay in a cycle of 7 or 10 days rather than the 60 or 90 days. So it's really worth asking the question. It's really worth checking, do they have this facility? And if so, what do you need to do to be paid in this way? Because part of your payment terms are 7 days or, you know, cash on delivery. So again, if you had a legal agreement that I mentioned earlier, it states the payment is within 7 days or 10 days, then talk to the purchasing department and negotiate with them. Now, often people are intimidated by the purchasing department or the procurement people, and I have to say rightly so, they're pretty scary people. And often we don't even ask. But you know, today's a pretty special day. It's actually the 30th of March in America. But Elon Musk and his SpaceX team have just launched a reused rocket, and it landed back on, of course, I Still Love You, which is the name of their landing pad. Every single person in the space industry said it could not be done, and he's just done it. Perseverance, persistence, resilience. And so, you know, these procurement people, they're just people, and they're just following their processes. So ask them, go and ask them, is there a way that you can be put on a short payment list? Maybe you can. Okay, so you've got your agreement in place, you've done your work, you've sent your invoice. So here's something that I've always done with businesses that I've worked with, and I've worked with clients over the years, and it's a common scenario. So you're dealing with Catherine in the art department at XYZ company, and you send Catherine your invoice and you wait for payment because you trust Catherine is going to put it into the system. Now, Catherine's busy. Now, here's the thing, depending on the size of the company, Catherine may never really come into much contact with the accounts department. And she's already, remember, she's already had whatever it is that you've done for her. And so her motivation to get you paid may diminish over time. So here's what you need to do to protect yourself. And if not you, you could get your bookkeeper to do this. About a week after you've sent your invoice to Catherine, you call the company and you ask to speak to the accounts person, the accounts payable or the accounts payable department. Depending on the size of the company, this could be an outsourced accounts department on the other side of the world, or it could be their bookkeeper, Sarah, who actually only works on Tuesdays. But you want to ask to speak to accounts, and you want to ask to have their email. And you email the invoice to them, and you say, look, I'm just checking that you have this invoice in your system for payment. Now, this is particularly important with larger companies. You put a note in your diary to call on Tuesday when Sarah's in, and you call about late morning. So that's if it's the bookkeeper, or you could talk to the accounts department and you say, hi Sarah, look, I'm Ingrid here from Healthy Numbers, and I just wanted to check that you've got my invoice in your system for payment. Yes, it's invoice number blah, 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 and it's the company. Oh, Sarah, you've got that in your system? That's terrific. And then you say, so Sarah, are you able to tell me when that's going to be paid? It's a 7-day account, and I'm just checking when you do your next payment run. Great, thanks. So I can expect the money in the bank of my account next Thursday. You do your payment runs every Thursday. Thanks so much for that. And that's the conversation you have. So you're actually having a conversation to make sure that your invoice is in the accounts system and you're finding out when it's going to be paid. And of course, if it's paid on Thursday, then that's terrific. And if it's not, then you follow up. So you do something like that. Now, you know she has the invoice, and you know that she'll do the payments. Because here's the thing, it's Sarah's job to pay you. But what happens if Sarah doesn't have your invoice? So instead of being annoyed, which would be the natural reaction, you actually just know that this is actually very helpful. You ask Sarah, what's the best way to get the invoice into her system? Catherine is your client, and Sarah's the person working in the accounts department. So you need to work with Sarah because she's the one that's going to pay you. It has to probably be approved by somebody, and so understanding what that payment approval system will give you the edge to having your payment made. So Sarah, how can I help you with this? Is it best for me to send the invoice straight to you, or do I go back to Catherine? And Sarah will help you to understand how to get that invoice paid in the system. Remember, it's Sarah's job to pay you. She wants to do it, and she knows that if she doesn't, you're going to keep calling her. So in my experience, the Sarahs of the world can help you get this paid. Now, remembering that the accounts people are usually in some underground part of the building, or they're in, some part of the building that has no windows. No one ever talks nicely to them. So if you're nice to them, chances are you've got a better chance of getting your invoice paid. And I tell people, don't leave this until the invoice is due or overdue to check if it's in the system. If you send the invoice today on the 31st of March and it's due for payment, say the 15th of April, you don't want to wait till the 15th of April to check, because if now Sarah doesn't even have the invoice in the system, now you've got to start figuring out what's happening. So if you check around the 7th of April and you've found that it's in the system, then that's great, it'll be paid. But if you find on the 7th of April it's not, now you can go back to Catherine and is there anything else to move the invoice into accounts? So this is another really great reason for having deposits and upfront payments. So Catherine's already got what you've done, and so she's less motivated to help get you paid, unless she's going to be working with you on a continuous basis. So check with your bookkeeper, and if you're doing your own accounts, if there's an automated reminders that you can set, the email reminder to go out for 2 days overdue, 5 days overdue. But jump on accounts as soon as they're due. And this follows on from that previous idea of your account is due and you know that Sarah has her in system and you're expecting the money to be in the account on Thursday because she told you, now it's Friday and there's no money. What do? You jump on it right away. Say, oh, hi, it's Ingrid here. I was expecting to have my invoice paid and it doesn't seem to be there. I'm just checking that you had the right account number. Which account number did you send it to? So that curiosity about why the payment is delayed. I've worked with a lot of debt collection for clients, and I have to say, over time, I have managed to help people get a lot of money in that they hadn't actually been able to do, mostly with this exact system. When you have called Sarah a few times, you become besties, and let me tell you, she'll help you. There will be times when it's out of Sarah's hands or whoever you're talking to, and you may need to ask to speak to the accountant or the business owner to get paid. Persistence and polite curious works every time. There was one time I was working with a corporate client and they had a pay at the end of the following month policy. So this was really important to know. If you sent an invoice today on the 31st of March and they only receive it on the 3rd of April because maybe they're not opening any more emails today, this corporate had a system where they paid at the end of the following month. So that would actually be the 31st of May. So when you know how a business operates, how to get your invoices in and who to send them to, that makes a big difference in dealing with large companies. And the other thing, as I mentioned earlier, is to make sure it's 100% correct, because there's nothing will stall your invoice faster than having something that's not correct. So all these things can hold up your payment. I told you about my doctor who didn't even have any bank account details. So you do question what sort of way is that to run a business. Chase small amounts. It's easy to think, oh, I'm just a small business or it's just a small amount. I don't really want to bother them. But you can actually use that for you. You can say, look, I know it's only a small amount in the scheme of things, but it means a lot to me to have this paid. That I'm just seeing here somebody's saying, yes, somebody's having that same problem with Google. You have the same problem with Google? Google paying you because you've done work for Google. Oh gosh, that's not good, is it? Getting upfront payments would be quite nice. Somebody at Google might have a credit card. You could always offer to take the payment on a credit card and then they have to work out how to get their own payment. There are nurses online. Oh yeah, when I was having my cough. Thank you. Sorry, that little part of my screen was hidden. Yeah, I'm fine now, thank you. So legal action, of course, that's the last resort. Although, you know, it can actually be helpful to understand how this works. I used to work with a debt collection agency who charged a nominal amount for a letter. The letter looks very official because it is, and it just says your account's overdue. To avoid any further action, it would be great if you paid it. It's polite and it's a reminder to their legal obligation. And, you know, often when you're dealing with a big company, their accounts are probably outsourced to some remote part of the world where it's just this huge. I remember when I dealt with Qantas, they had an accounts department that was somewhere, I'm not even sure where they were. And, you know, it just, these invoices just went out into a system that it's very, very hard to track, very hard to speak to anybody. So I know this can be incredibly frustrating. The thing is, once you actually get a payment cycle set up, that can actually be really helpful. It's often the initial stages that are the tricky part. But a legal action letter, truly most people don't want to receive a letter. So if you're dealing with a business, they really would like to avoid not having that, because it can be useful to say something like, look, it would be good if we could get this paid. I don't really want to have to hand this over to a collection agency. So I just need to let you know that if it gets too much overdue, our company policy is to use that collection agency. And again, if you don't want to be the person doing this because you're the person having the relationship with the business, this is something your bookkeeper can actually do for you. And never ever write off your debts, because if people start to get an idea that you let people off with payments, words might get out, word might get out that that's how you do things. So I'm just, sorry, I just need to go back one slide, go back up. So, so that was 8. So the 8 that we've got there are taking deposits, managing stock, funding equipment out of profits, asking for prepayments, making more sales and really looking at your prices, making sure you're charging enough, setting aside money for GST, issuing invoices on time and completely accurately, and chasing the outstanding debtors. So just a couple more is discounting. I'm really going to suggest you stop discounting, charge the full price. If you're offering discounts, track them. And if you're doing work for free, track it. You'll be surprised how much it can add up to over time. For an example, someone says, let's have coffee and a chat. You take 45 minutes and they pick your brain. That's the same as giving an hour of your time away for free. I'm not saying don't do that. I'm just saying, you know, be really mindful of how your time can leach away as well. And one of the things that maybe not anybody here on this call, but one of the things that sometimes happens is that people pay themselves too much. I love the example of Dermalogica and how the owners actually paid themselves almost nothing for about the first 5 years because almost every cent went back into the business. And sometimes business owners do make that tough decision to not pay themselves very much money. But of course, the reason we get into business is to pay ourselves the money so that we can actually, you know, have the lifestyle. And it may only be 3 or 6 months to pay off the early money spent. So one of the things that I always talk to my clients about is having that money saved. So fluctuations can really can be anticipated, although sometimes it can feel like we're on a roller coaster with fluctuations. So create a plan for how to deal with those fluctuations in sales that affect cash flow. And if you know that there's less sales in January, or if there's times of the month, times of the year that have more or less, you have bumper months, and how do you plan to save for those rainy days when you've got months that are more financially viable, that you make more money? How do you put some of that away so that in those months that you you know, you've got some stashed savings for the lean months? Look at your expenses for the month and reduce any unnecessary payments in those leaner months. And how can you pay for things across time? So where you've got this sort of roller coaster going on, is there some ways that you can put monies that you pay quarterly instead of annually, that you pay monthly instead of quarterly? How can you, and so how much do you actually need every week just to cover those fixed expenses? So, you know, one of the things that can happen is that we can grow too quickly, and that can actually put pressure on a business. And it might seem counterintuitive to some people, because it might seem we want the business to grow and to grow quickly, that we want orders to flow in, new clients to want to rush to us. But what would actually happen if you had twice as many clients right now? What would actually happen? What would actually happen if you had twice as many customers right now as you actually do? And what can you do to plan for that? How do you plan? Oh dear, here goes some more coffee. Oh dear. Take deposits, prepayments can be a way to fund growth. And if you're taking prepayments or deposits, it can also be a great way to gauge the level of interest in the growth ideas in your business. So one of the other aspects to think about when growing quickly is that you have processes and systems in place to sustain your growth. So if you were suddenly to have more, how would you be able to service that much more in your business? So there we have 8 ways to improve your cash flow, an additional 4. And what I suggest right now is that you actually choose 1 or 2 of these that you could actually use. So for business to be truly viable in the long term, it must be able to generate positive cash flow continuously. There will be times when there are large outflows of cash due to purchases or seasonal factors, and when the business is managing its cash flow, it's able to ride out those dips and reserves. Serious problems arise when there is more net outflows than there is net inflows. So using your tracker, your Excel spreadsheet, to have a look at where your cash flow is right now. And this just becomes a straightforward part of the calculation to do maybe every day or every week, depending on what your business is like. So you've got this tool to use. If you need any help with it, let me know. So whatever you choose, it's important to keep track of your future cash flow and then put into place actions to mitigate running out of cash. So cash flow can be forward projected for the next few days or for a number of weeks or for even months in advance. So how are we tracking here? Great practical suggestions. Thanks so much. How are we tracking in general? How are you feeling about money? Thanks very much for that compliment. That's really lovely. Because I have 2 more questions we're going to talk about before we finish, because they were in the, one was about burn rate. What is a burn rate and why is it important to know what it is? And what is a cash cow? We're going to finish on something really nice, and that's a cash cow. So so if you could just let me know. Somebody's feeling rich. Oh, that's good. Maybe you've downloaded your spreadsheet and you're already working on it. Someone's feeling like they've got some great ideas. Thanks so much for that. Yep. Yep. And honestly, if you need any extra help with that, just let me know. I know some of you are dealing with larger companies. I know there's a couple of you on the call that are dealing with large companies, and it's really hard to, but once you get those payments set up, and, you know, get your bookkeeper to make those calls, and if you want to know who the person is that I've used for the agency for debt collection, they charge a very minimal amount for that first letter. And remember, that letter actually goes to the accounts department. It doesn't actually go to your contact. So, you know, depending on the size of the business, this kind of thing can be quite a powerful way to get things paid. But go to the accounts department, talk to the accountant, what ways can you actually get your accounts paid? And when you're setting it up early, how do you let them know that 7 days or 10 days is your normal payment terms? Rather than just being on the receiving end of their 60 days or their 120 days, because it's pretty ridiculous. Okay, burn rate. What is a burn rate? So this applies mostly to startups. The burn rate refers to how quickly you burn through cash. A burn rate is usually the monthly amount of cash spent in the early years of a startup business. It's different to break even because, oh dear, this naughty nose and throat. It's different to break even. The burn rate is an important metric since a new business must spend time and money developing a product or a service before it actually starts to receive very much from sales revenue. So, you know, like say you've spent $200,000 in initial cash, and the burn rate is $20,000 a month. So that means if there's $200,000 and your burn rate is $20,000 a month because your expenses are $20,000, the company will be out of cash in 10 months. So I don't know the finances of the gorgeous cake shop at the top of my street, but let's say, for example, they had a certain amount of money that they had to get started. They spent this much on the actual fit out, and maybe they know that and they still have this much left over, and that they have to be absolutely viable by 3 months' time or 6 months' time. So that's part of their motivation, that, you know, how long will that money last until they actually run out of money. So, you know, I talk about that with, in my book about getting ready to start a business. You know, how much do you actually need for yourself and then for your business, and how long will it be before, you know, while you're actually building the business to actually pay yourself. So it's important that a startup business monitors all of its expenditures and avoid payments that will not speed up or increase revenues. So really being smart about where you spend money. So a cash cow, and I thought I love this photo. And, you know, cash cow is a funny sort of expression. I've got a couple of you saying it's not really cash flow problem. Yeah, so don't have very many sales at the moment, so your burn rate, the person who's just made that comment, thank you, you have a cash flow problem as you don't have the sales at the moment, and so you have your burn rate, and so if you have this much money, then how many months until you really absolutely need to be making some sales. So a cash cow is a product that's highly profitable or a similar highly profitable service that dominates a market and generates a lot of cash. It's a business jargon. It's a business venture that generates a steady return of profits that far exceed the outlay of cash. So why would you want one in your business? Man, wouldn't it be great to have one? Cash cow generates a steady, reliable cash flow that continues to fund its own growth, as well as the growth of other parts of the business. And the amount of cash it generates is significantly more than the amount needed to maintain its market position. Totally cash flow positive. If a business is fortunate enough to find one or to have a cash cow, they can use that money from the cash cow to develop new products. It's also used to describe a division or a segment of a company that consistently generates substantial amounts of excess cash. I worked for CSR Limited. We had a sugar division, ready mix, timber products, Gyprock, and at that time, Gyprock was pretty much the cash cow of that business because it was almost like a license to print money. Thanks very much for some of the things we're doing well and giving us advice on some other stuff, how to chase up payments. Thank you very much for that comment. So can you think of some examples if we come back to the cash cow? Some well-known examples is Coca-Cola, the iPod, the iPhone, Google, some fast-moving consumer goods, FMCGs, Procter & Gamble's Tide washing powder, costs them almost nothing to make, and it just rolls in money for them. And they don't have to spend very much more money on the actual development of more product. Kellogg's cornflakes is a cash cow. They just make their cornflakes and it just brings them in lots of money. So how would you go about finding one for your business? So, you know, you find something that people value and that provides terrific value and solves their problem. So possibly one thing they didn't know they had. We didn't know we needed an iPhone, and now we cannot live without it. And it doesn't have to be difficult. So there's only two things you need to know to create a cash cow in your business. How can you create something of value in a market that is so much better than what's already out there? Step one, how do you create something of value in a market that's better than what's already out there? Business 101. Step two, when you do that, how can you reach the market? But that's marketing 101, and you don't need step two until you've actually figured out step one. So let me give you a recent example. See these? I don't know if you've seen these, but this is made by a company called The Daily Edited. And I have one of these. Somebody gave me one with my name written on it. I can't do a photo of it because it's actually, her photos from her website are so much nicer. And so it's a very elegant way of having a cover for your phone. It's embossed. I was giving it as a gift. It's very expensive and it costs almost nothing for them to produce. So this was a company called The Daily Edited, created by Alice Tran and Tanya Liu. They started it about 5 years ago, and you know what? They now have a turnover of $15 million. But it wasn't always like that. The first few years, they started with just a they actually started in clothing, and they didn't get that really right. And they messed around with a blog and taking photos of clothing and trying to sell clothing. And then Alice Tran, who was a lawyer at the time, created her first products because she couldn't find a compendium at the right price and the right quality she desired, so she decided to get one herself. She found a leather compendium and a card holder and a pouch. And they were only in 3 colours, and that was in 2014. The iPhone covers were yet to follow. But these products are now, she's launching into the US very soon, but it's absolutely an example of cash cow. But it came from that step one that I was just talking about, something of incredible value in a market that is better than what's already out there. So she couldn't find a compendium, and she realised that other people felt the same. So who wouldn't love a cash cow? So how can you create something of value in a market that's better than what's already available? So on that happy note, I'm going to bring this webinar to a close. Did we get within our time? Oh gosh, we're just a couple of minutes over. So where do you go from here? I hope you've been making notes. You will have 12 strategies. I know some of this doesn't apply to everybody. I've talked about 12 different ways. If you're listening to the recording, of course, you can go back anytime and listen and remind yourself. So taking deposits, managing your stock and material, and that's not just about the money going out. It's actually about, you know, not having things damaged, not having things go into out of date or expiry, funding equipment from profits rather than borrowing money. But if you have to borrow money, being smart about how you do that. Asking for prepayments. Setting up a system where you get some of the money in, you get the full money in, not just the deposit. Making more sales and really taking a good look at your break-even point and making sure that your prices are right. Setting aside the money from GST. Thank you very much. I've got somebody saying thanks, they have to go. Setting aside the GST, and I know a couple of you already do that. chase your outstanding debtors, have a process for ensuring that they don't get too outstanding, and making sure those invoices are completely accurate, because there's nothing will hold that up quicker. Some of the other things that I mentioned was about discounting and just watching to make sure that, just track, are you discounting and how much is that costing? Look at how much you're paying yourself, is it realistic to take that much out of the business when, if you're going through some of the dips, the peaks and troughs? And how can you actually have enough money coming in on a regular basis so that you're actually having a consistent income? Plan for fluctuations, and part of that planning for fluctuations can be, creating something where people pay you on a more regular basis. Plan for growth and fund from profits. So what I suggest you do is that you choose one or two of those and start to implement them. If you're already doing some of these things, how could you do them a bit better? What small tweaks could you make based on what you've heard today? Take that cash flow predictor worksheet and start to add in the amounts that you've got in your business. And always, as always, if you need any assistance, email me at training@healthynumbers.com.au. And if you want to listen to the other inspiring interviews with other business startups, head over to iTunes and listen to my podcast. Are there any further questions? Where are we here? There we go. Thanks so much, Ingrid. Feeling very positive. Oh, and heading off to have a glass of rosé. Very nice. Thank you very much. I know there's a couple of you still here. I'll just wait for another little moment to see if there's any further questions, because I might have to go and get, actually I don't think I'll be having a glass of wine. It was so lovely not to be sold to on a webinar. Oh, I never sell. No, I don't sell on these webinars. Honestly, that's not it's all about thank you, bye, thanks Claire. No, it's not a selling to. These are purely information, so you can, with confidence, please send out any of my invites to webinars to anybody that you know. The only thing I want to do is provide information to people who are trying to do their best in their business. So always available to answer your questions, always about providing the best information I possibly can. So with that, I might just say cheerio to everybody. We're just over that by 5 minutes. Thank you so much. And I shall, oh yes, enjoy your weekends too. Yoga and surfing, and I know some people have got visitors coming, and all of that. So, alrighty, I'll see you all in the next webinar, I hope. Thanks. Bye.